तो बनाया था।
सारे लोग सही है। ये लाइव स्ट्रीमिंग आ गया इसमें।
नमस्कार सर।
नमस्कार, नमस्कार. Good afternoon.
गुड आफ्टरनून सर।
Good afternoon, Nanda sir.
Good
नमस्कार सर।
afternoon, Tushaji.
Good afternoon, sir. How are you, sir?
Very fine. What about
सर
you?
ज्वाइन कर लीजिए।
I'm good. I'm good.
ओके। अभी 5-7 मिनट वेट कर लेंगे, काफी पार्टिसिपेंट आ रहे हैं, अभी 200-300 तक हो रहे हैं, अभी और भी कुछ आ रहे हैं।
All right.
रजिस्ट्रेशन नियर अबाउट 1500 है,
हाँ ठीक.
थोड़ा वेट कर लेते हैं 5-10 मिनट।
Nanda ji, let's start.
हाँ सर, मैं उनका कोई फोन आ गया, अभी 5 मिनट में कर रहे हैं सर, विद इन 5 मिनट्स टू स्टार्ट, तो पार्टिसिपेट भी आएंगे।
Say ASAP. Participants का वेट मत कीजिए, उनसे बोलिए ASAP.
ओके ओके सर।
Nanda ji, you start.
Yes.
Not an issue.
मैं बोल दूँ, स्टार्ट कर रहे हैं। यस सर।
Yes, Sharma ji, start.
Namaskar, Chairman Sahab, Shri Bimal Jain ji, Namaskar, and our co-chairs. Very good afternoon to all.
Namaskar, Sharma ji, start कीजिए.
जी. A very good afternoon to all. On behalf of PSD Chamber of Commerce and Industry, we welcome you all for today's webinar on Get Ready to File GSTR9 and GSTR9C for FY 2021-2022, being organized by Indirect Taxes Committee of PSD Chamber of Commerce and Industry. And I would like to mention that PSD Chamber of Commerce and Industry, under the ambit of Indirect Taxes Committee of PSD Chamber, chaired by Shri Bimal Jain ji, is organizing so many programs, knowledge series for the benefit of the trade and industry, so that our trade trajectory and our ease of doing business becomes more and more prominent at the ground level. We have organized many times. I think more than 20 programs have been organized by the committee, the awareness of the people, businesses, and the industry stakeholders. We continue to organize such programs, and today's program, as we know that GSTR9C must be prepared and self-certified by the taxpayer. It must be filed on the GST portal or through a facilitation center by the taxpayer other documents such as the copy of the audited accounts and annual return in form of GSTR. And now this becomes very, very crucial to know about the parameters and all the developments in this segment. Our chairman, with his dynamic thoughts, has provided us this awareness that we should organize this program for the benefit of trade and industry. So, not taking much time, I would like to invite our chair, Shri Bimal Jainji, for his welcome remarks. Before calling him, I would like to say a few words about him. Shri Bimal Jainji is our chairman in of PhD Chamber of Commerce and Industry. He is executive director of A to Z Tax Corp LLP, tax and law practitioners. He has a vast experience in direct taxation, GST, service tax, excise, VAT, CST, FTP, DGFT matters, etc. And he's known for his extraordinary thoughts in the GST curricula, GST segment, and awareness of the and all the tedious issues related to GST to spread across the country. So with these words, I would like to invite our chair, Shri Bimal Jainji, for the welcome remarks.
At the outset, let me thank and invite each one of you. More than 500 participants has already joined. That shows the importance of this topic. Get ready to file GSTR9 and 9C. Thanking learned speakers. There are 3 speakers today. Tusarji, Swetaji, and Pavanji. They are going to make technical presentations. So I will not get into technical part, but definitely I'm going to throw some questions for each of the speakers. They can take those questions in their deliberation, which may be interesting for the trade members for their preparation to file GSTR 9 and 9C. I know that GSTR 9 and 9C, what we have seen from 17-18, we are considering 9 and 9C as a reconciliation, mathematical reconciliation. And to my mind, it is not mathematical reconciliation. There are many things which we need to do. In realistic terms, when you go to a hospital, you get your health check done. And after, Nandaji, kindly mute yourself. Nandaji, mute yourself. Yeah. When you get your health check done, you get certain report. And after that, your medication starts. Similarly, in GST regime, this 9 and 9C is nothing but a health check and diagnostic review. It cannot be considered, I'm saying cannot be considered, only reconciliation and collating the data from GSTR1, GSTR3B books. I'm of the view we are on a wrong side. Today, if you are attending this webinar, I'm sure you will get a lot of good insight. And fortunate part, we are doing this program in September 2022. Fortunate part that in case you have done mistake and you have not corrected your mistake as yet. So this is blessing in disguise. And we all expect opinion free of cost. So our learned speakers are here today to get you all opinion, how you can correct your mistakes of financial year 21-22. For that, we are sitting today. And this is fortunate because I said September 2022, then you will have not lot of pointers. And I've seen that in question answer, you started posting also. 5 years gone in GST, but still we all are evolving and developing. And in the matter of interpretation, rest assured, you will find divergent perspective, divergent views, divergent opinion. And within that process, we have to do everything correct. If we are not doing correctly, then implication of interest, penalty, and we have to be ready for that. So let's start today's session. So in my theme presentation, first and foremost, who are supposed to file GSTR 9 and 9C? First question to all of us together. fortunate part, a registered person having aggregate turnover less than 2 crore, then he is exempted not to file GSTR9, which is called annual return. And if his turnover is in between 2 crore to 5 crore aggregate turnover, then mandatorily, compulsorily, he has to file GSTR9. So what happened for GSTR9C, reconciliation statement, which we have seen in the past until 2019-20 financial year, was audited by practicing chartered accountant or cost accountant. It is being done away with from last financial year 2021, and it is self-certified for 21-22 as well. Threshold is increased from 2 crore to 5 crore. So reconciliation statement in GSTR9C is required only when aggregate turnover is more than 5 crore. So what is the meaning of aggregate turnover? Still today we are finding, a lot of, difference of wording, opinion, understanding. Aggregate turnover as per GST law is sum total of taxable supplies, exempted supplies, even export, sum total of on PAN basis, all India basis. So you may have 4 separate GST registration in 4 different states. You have to do sum total of your total taxable supply, exempted supply. When I say exempted, it is nil rated or exempted by way of exemption notification and not chargeable to GST. And export turnover need to be added to check this threshold limit, which I referred just a while ago. First part. So you have understood to whom it is applicable. Second question. What is the due date for filing 9 and 9C? Reconciliation statement is self-certified. No certification by practicing chartered accountant or cost accountant. So the question which is very much important, what is the last date and how we would be preparing ourselves? Last date is 31st December 2022 for filing 9 and 9C. So this date is very, very important. In continuation, that we have seen that even the taxpayer and tax professionals are struggling with so many timelines under Income Tax Act, under GST, under other provision as well. So there are a lot of work, and one after another due date is coming in, and we have to comply with. And we have seen in the past years that we have put our request for extension of due date for filing GSTR9 and 9C. I'm asking one question to all of you. You try to answer by yourself. Is it really wise, correct, that we should demand extension and due date for filing GSTR9 and 9C? Just answer by yourself. To my mind, demanding extension in due date is not correct. It has got so many ramifications that by demanding extension in due date, it has ramification under section 73, which is for your so-called notice and order for non-fraud cases. Section 74, fraud cases. It is calculated 3 years for 73 and 5 years for 74 from the due date of furnishing annual return. So if this date gets extended, then by default, department gets longer time period for issuance of order and so-called notice under section 73 and 74. For that reason, demanding extension is not advisable. But at the same time, if we are practically facing problem, What we should demand? We should rather demand waiver of late fees. Waiver of late fees for the extended time period. That is advisable. Another ramification which you will find in GST law, period to retain your books of accounts under section 36 is 72 months from the due date of furnishing annual return. So if a date getting extended on our request, it is having ramification on us. So we should not demand extension of due date, rather waiver of late fees. Continuing further, I'm giving one live example to all of you that how practically this extension of due date is not favorable to the taxpayer. Just start thinking 2017-18 financial year, right? Normal due date, normal, had it not been extended, normal due date could have been 31st December 2018, right? Normal, had it not been extended. But we all know for 17-18, it got extended to 31st January 2020. And for some of the state, it was either 5th of February 2020 or 7th of February 2020, right? So for 73, so-called notice 3 years, order is 3 years, right? And that too from due date of furnishing annual return. So if we see that 31st January 2020, which is the extended due date for financial year 17-18, 3 years going to be calculated from 31st January 2020. So it could have been closed on 31st January 23, right? But see, government always proactive in terms of, taking advantage, and they do amendment in that regard. Recently for 73 issuance of so-called notice for 17-18, time period is now extended to 30th September 2023. 30th September 2023. So even after having extension of due date, extended time period, this time period is extended for issuance of so-called notice, an order. So order is 3 years for 73, 5 years for 74, but issuance of so-called notice at least 3 months before the due date for furnishing order as per 73, and which is 6 months for the section 74. So we should not demand extension, rather, if at all any problem, practical problem, we should demand waiver of late fees. Having said that, what is 9 and 9C? 9 GSTR9 is the annual return. It is divided into 6 parts and having 19 tables, 1-9. GSTR9C 5 part and 16 tables. And these 9 and 9C is on 3 broad parameter. What are those 3 broad parameter? Outward supply, on which we are paying the taxes, or some outward supply on which tax is not payable. That may be zero-rated supply without payment of tax, exempted supply, nil-rated supply, tax is not payable, but part of my outward supply. Second is important GST Input Tax Credit, ITC, Input Tax Credit. And the last component is tax payable and tax paid. We all know in GST, we are filing GSTR1, which is outward supply. And GSTR2 and 3 is being done away with. Over a period of time, they have said that the credit availed by the registered person must be cross-checked, verified, and matched with GSTR2A or 2B. Legal dispute is on, but department want it must be reconciled. ITC must be reconciled with GSTR2A or 2B. And then we are filing GSTR3B consolidated, having my outward supply, ITC, net tax payable, and we are paying either through e-cash ledger or through e-credit ledger. Again, I'm reiterating my point. Is it the compilation? It is the reconciliation of mathematical numbers as we have furnished in GSTR9 or GSTR3B for outward supply and GST input tax credit? To my mind, it is incorrect perspective. This is the time we must do due diligence, health check, proper due diligence and health check. And I'm sure technical speakers like Tushar, Shweta and Pavan going to add value for our understanding sake on those legal pointers. Just to give brief example, if you go to outward supply in GSTR9 annual return, and we are discussing financial year 21-22. So if any outward supply pertaining to 21-22 shown in 21-22, there is specific table, table 4, on which tax is payable, along with advance for supply of services on which GST leviable, and inward supply subject to RCM, table 4. Fact and figures of 21-22 shown in 21-22. If tax is not payable, table 5. Corresponding taxes payable and paid shown in table 9. But any adjustment by way of adjustment or by way of debit note or credit note, if there is a liability upward pertaining to 21-22, but shown in the period April 22 to September 22, this period. So September 22 is still on. So that's the reason I've said this blessing in disguise for our preparation. Then table 10 and table 11. Table 10 talks about upward liability and table 11 talks about downward liability and corresponding taxes paid because of table 10 and 11 shown in table 14. This is the brief background I'm giving. I'm not going in detailed part. I'm sure you will have a lot of, practical queries, practical presentation, practical example. What happened for GST input tax credit? Table 6 is important. Credit of 21-22 avail in 21-22. Table 6. Table 7 reversal. 21-22 reverse in 21-22. Matching with 2A. Table 8 and table 9, as I said, tax payable and tax paid. But any adjustment of 21-22 pertaining to GST input tax credit, which is being done in the period April 22 to September 2022, then table 12 reversal and table 13 availed need to be mentioned. But this is the background I said. Now let me start with the questionnaires and the pointers, which I would be expecting that you should know, and even the speaker is going to touch base those pointers for detailed deliberation today. Let's look at the outward supply first. Outward supply. There's one factor called spillover effect. Spillover effect. So there may be a case that some turnover of 2021, which is gone, which you may have mentioned in the period April 21 to September 21. And it is being shown in GSTR1 of that 21, April 21 to September 21. So this spillover effect, how to be shown? What are the options available when you are compiling your GSTR9 and 9C? Hope you got it. And just for sake of an example, let's say 100 rupees is the turnover in 2021, assumed. But 80 is being shown in 2021 and 20 is being shown in April 21 to September 21. Part of, disclosure in financial year 21-22. How to bifurcate? This may be relevant even for GST input tax credit. So we should know spillover fact and figures, numbers, how to be shown in GSTR9 and 9C first. Second, when we talk about outward supply, we all know intrastate CGST, SGST, interstate IGST. And sometimes we make mistake. Sometimes we treat our transaction wrongly. So let's say I'm in Delhi, registered supplier Delhi, supplying to a recipient buyer in Maharashtra. IGST leviable, but there is a mistake, maybe mistake on my part. I treated the same as a intrastate supply, CGST and Delhi SGST. I charge the same. It is being paid by the buyer and I've deposited also. My question to all of you, do we really require to pay correct taxes, which is IGST? But wrongly I charged, wrongly I collected, and wrongly I paid. And you can always argue, I've already paid the taxes. Let government adjust the CGST and Delhi SGST with the payment of IGST. Question is very important, right? So do we require to correct it? If we require to correct it, how we can correct the same? First, when we are correcting, then question will come, do I require to pay IGST again? Third question, if I'm required to pay IGST again, which is the transaction, correct transaction. So what happened for wrongly paid taxes, CGST and SGST? Do I get refund? So while paying correct taxes, IGST, after longer time period, with the interest leviable. And when I'm claiming refund on payment of correct tax, IGST, is there any time limit? 2 years, section 54 of CGST Act. So very much relevant, very much relevant. And circular number 162, dated 25th of September 2021 would be relevant one. So I'm not giving the answer. I'm only igniting your mind and leaving these pointers for the technical presenter speakers to deliberate on. Going further, when I said spillover and wrongly paid taxes, these are the two factors I said. Now let's look at the GST Input Tax Credit, because you know it is 2A and 2A made available sometime beginning of 2019. 2B provision got introduced from 1st January 2022. So what is the relevance of this 2A or 2B for availing credit and financial year 21-22? So whether my credit is really dependent on GSTR 2A, important one, right? You'd be thinking whether really important. And let me give you some of the, pointers which you require to reconcile now, which you require to correct if there is a mistake. Let's look at the part first. I'm a supplier from Delhi, and you all are my buyer in Maharashtra. While furnishing GSTR9, I was supposed to mention your GST number, but wrongly I furnished the GST number of your neighbor, some other party. Is it going to be reflected in your GSTR 2A or 2B? Just start thinking. It will not be reflected, because supplier has furnished wrong particulars in a GSTR1, but you are having correct invoice, having correct particulars. You have availed the credit, but it is not matching with GSTR 2A or 2B. Second transaction could be B2B supply, registered supplier to registered recipient, wrongly furnished by the supplier as a B2C. Is it going to be reflected in your 2A or 2B? In recipient, buyers 2A or 2B? It will not be. So what is the way forward? How to correct the same? We are in the month of September 2022. Do we have any mechanism that you as a recipient, you as a buyer come back to the supplier and supplier must correct it? There are mechanisms. I said blessing in disguise. And I'm sure you are going to get all these answers today. Let's take third example. The place of supply must be Maharashtra, Delhi to Maharashtra, but wrongly furnished as a Delhi. So it is coming in my 2A, 2B as a ineligible credit because place of supply is Delhi, whereas it should have been Maharashtra. So what happened? There may be a case supplier is only filing GSTR 3B, but did not file GSTR 1. Is it going to be reflected in your GSTR 2A or 2B? These are the pointers we need to dig out. We need to work out. So what we have to do for reconciliation, we have to sit down. We have to take three components before us. First, my books of accounts which I'm maintaining. Then GSTR9 for outward supply. And then GSTR3B for payment of tax. So when I'm taking three component books of accounts, GSTR9 and GSTR3B, I'm giving you an example and you start thinking on those lines. Let's say books is showing 100 rupees or 100 crore rupees. Let's talk about big number for 21-22. One is also correctly furnished with 100 rupees. But GSTR3B, you have shown only 80 rupees. You have paid the taxes 80 rupees. 20 rupees differential we need to pay taxes, right? So what is the mechanism? Can I pay in GSTR3B of September month 2022 or through DRC03? Start thinking, because these are the pointers going to help you today. Reverse the case. Books outward supply 100 rupees. GSTR9 is only 80 rupees. And 3B 100 rupees. You paid the taxes. Since you have shown 80 rupees in GSTR9 by supplier, quite obvious, buyer can see credit only to the extent of 80 rupees. So 20 rupees difference, what to be done? Whether this month is really important for us. Wait and watch. Today you have to stay back with us to understand all these pointers. I'm only giving food for thought. I'm only igniting your mind. And what is the role? When you say self-certified, maker and checker concept is there, right? In accounting fundamental, we have seen maker and checker. Those who make, they should not check. But now it is being done away. You don't require any CA certification or cost accountant certification. But is it going to help us? And why it is being done away with, we all know. It becomes only certification work instead of diagnostic or health check, which is required to be done. Come to GST Input Tax Credit. There may be a case that the credit is not matching with 2A or 2B. There may be a case. So I'm just giving some food for thought and some more question for GST Input Tax Credit. I have correctly raised IGST invoice from Delhi to Maharashtra, correctly furnished in my GSTR9, correctly going in your 2A as a IGST, but you as a recipient made the mistake. You have taken credit under the category of CGST and SGST, whereas you should have taken credit under IGST bucket. Am I right in saying so? So how to correct it? What are the ways and means? There another problem pertaining to ITC is time limit to avail credit, section 16, subsection 4. Time limit to avail credit, right? And as per section 16, subsection 4, it would be earliest of due date. Due date for furnishing 3B for September, following the end of financial year 21-22. Then due date would be 20th October 2022. But the Finance Act 2022 has made changes. It is now 30th November, but yet to be notified. It is prospective clause. So to my mind, it is not applicable for financial year 21-22. For us, last date would be 20th October 2022. So we have to be very much careful, whatever not coming in 2A for either or region, which I've said, we need to get it corrected. And this is the month we should go back to the supplier and telling him, sir, you have captured B2B as a B2C. You have not correctly mentioned my GST number. Your place of supply is incorrect. And there may be a case, it is IGST leviable, Delhi to Maharashtra, but GSTR9 is being furnished as a wrong place of supply, Delhi. So need to be corrected. And this is the month where we should act on. Section 37 for amendment of GSTR9 by the supplier. It is also by Finance Act 2022, 30th November, but this prospective clause. So for 21-22, this is the last month, and I'm saying once again, blessing in disguise. Let's jot down all those pointers and do correct in this month only. That is what advantage. Another query I get, RCM, reverse charge method, liability and corresponding credit. So reverse charge method, we know under section 9, subsection 3 for specified goods or services, wide notified notification, 4/2017 for goods, 13/2017 for services. You may have procured from registered supplier versus unregistered supplier. So we need to really understand what happened if there's a past period liability of RCM. Can I pay in the current month and take the credit in current financial year? With a time limit for section 16, subsection 4 will not be violated. So I'm leaving these questions. I'm not answering. I'm leaving this question on your behalf. And you also start thinking. When I say section 16, subsection 4, there may be debit note. So the invoices range, original invoices range in 1819, but the corresponding debit note is raised current dated, today's date, 22nd of September 2022. With the time limit for debit note will be checked from the original date, 1819, or it would be today's date. We have to really find the answer of those queries. Now, having said everything, now I want to hand over this platform to all technical speakers. Tushar going to make presentation on outward supply. Then you need to reconciliation 9 and 9C, proper reconciliation with books of accounts. Shweta going to make presentation on GST Input Tax Credit. And then नंदा जी म्यूट
Yes, sir.
आपके
Yes, sir.
यहाँ पे बहुत सारी आवाजें हैं,
नहीं, sorry.
म्यूट कीजिए आप. अच्छा. And then Pavan going to summarize today's, GSTR9 and 9C. I'm thankful to each one of you. I've ignited your mind, given a platter to my all learned speaker for their deliberation today. And I wanted to make it more interesting. That's the reason I've given this platter, that this is what my wish list as a customer. I'm looking these kind of food today, these kind of servicing from my learned speaker. So handing over to Tushar and Nanda ji can start with the introduction of Tushar and followed
Yes,
by other speaker.
Thank you, sir. Now I request to say Tushar ji to present his presentation on intrastate and outward supplies, wrong statement of the supply of intrastate instead of interstate, or vice versa, capture as B2C instead of B2B, and discussion of all relevant tables of outward supplies of GSTR9 and 9C, reconciliation books of turnover versus GSTR1 and GSTR3B. So before calling him, I want to introduce Sri Tushar ji. He is a chartered accountant by qualification and a founder partner of Tattvam Advisor. He has more than 10 years of experience in indirect taxes. He has worked of the more than 8 years with Lakshmi Kumar and Sridharan attorneys. He is also deployed by Goods and Service Tax Network for GST implementation and has worked closely with the Government of India. He has worked extensively with Government of India on designing GST returns, audit and other formats. So Tushar sir, please start your presentation.
Thank you, Nandaji, for your kind introduction. I'm just sharing my screen.
Yes, sir. Yes, sir. Visible now.
At the outset, I would like to thank PhD Chamber, Bimal Jain sir, Nanda sir, Shama sir, and other members for giving me this opportunity. Good evening to all the participants. Friends, preparation of GSTR 9 and 9C is a conceptual concept. It is not merely reconciliation. It is rather putting the reconciled data in the correct tables, correct formats in GSTR 9 and 9C to give a true and correct picture. Let me give you an example to show how important GSTR 9 and 9C is. Recently, Bombay High Court in one of the judgment has held that it was the matter of refund. The taxpayer had filed application for refund of accumulated credit on account of export of goods. But he had not reported this export turnover in the monthly returns, that is GSTR 3B. He in fact reported the same in annual return. The jurisdictional authority rejected the claim, the appellate authority rejected the claim, and it is High Court who said that if the SSE has not reported something in GSTR 3B, but effectively have reported the same in GSTR 9, please look at GSTR 9. So courts are also saying that GSTR 9 is a sufficient evidence to see the correct and true particulars of an entity. So in next 30 minutes, what we will discuss is one of the most important component of this GSTR 9 and 9C, that is outward details. When I talk about outward details, it means how do I present my data which is captured in my books or in my GSTR 1 or GSTR 3B, how to capture the same in my GSTR 9 and 9C. Friends, when we talk about output table, it is important to note that all these outward tables are linked with each other. So we have to understand the concept, the way GSTR 9 has been drafted, GSTR 9C has been drafted. In GSTR 9, the relevant table is table number 4, 5, 10, 11. These are the 4 tables which are very relevant for my outward details, along with GSTR, along with table number 9 and 14. So these are the tables which are very relevant. So what we will discuss is we will go through all these tables, table number 4, 5, 10, 11, and what is table number 9 and 14. After going through these tables, we will take 8 case studies. So I have 8 case studies. I will discuss all these case studies and will try to answer all the questions be raised by Bimal sir. Friends, GSTR 9, table number 4 and 5. Table number 4 and 5 deals with details of my outward supplies. So in table number 4 and 5, I present that data which is pertaining to 21-22 and which is also reported in 21 and 22. I repeat, table number 4 and 5 captures my outward details pertaining to financial year 21-22, which is also reported in the returns of 21 and 22. However, the details which are pertaining to 21 and 22, but are reported in 22 and 23, that will be captured in table number 10 and 11. So this sum total of table number 4, 5, 10, 11 will give my GST turnover, which I have to reconcile with my financial turnover in GSTR 9C. Let's see what is this table number 4, 5, 10, 11 and how it is linked with my payment tables of that is table number 9 and 14. Moving on to table number 4, it captures the supplies which I have made during the period financial year 21-22, and it captures all the taxable supplies wherein I have paid my output GST. So 4A is B2C, 4B is B2B. They have divided it transaction wise. C is my export on payment of tax. D is supplies to SEZ on payment of tax. Then we have deemed exports. So these, we have to bifurcate our entire data into B2B, B2C, SEZ, export, deemed export format. Again, all these are mandatory fields. Further, there may be a case that apart for invoices, I must have issued credit note or debit note also. So I can show this figure net of debit note or credit note. Otherwise, you have an option to show a debit note and credit note figure separately also, but it is not mandatory. And what is mandatory is only 4A, 4B, 4C, 4D, 4E, and 4F. So all these figure can be shown net of debit note and credit note. F pertains to the advances which you have received on which tax has been issued, has been paid, but invoice has not been issued. You have paid the tax, but invoice has not been issued. That will go in 4F and it should match with your GSTR 3B returns also. 4G deals with your inward supplies on which tax is to be paid under reverse charge mechanism. So whatever tax I have paid under reverse charge mechanism in 21-22, I will show it in this particular field. There may be a situation like for financial year 21-22, I have not discharged reverse charge on certain import of services, say. Now in September 2022, I came to know that this is left while I am undertaking my output and inward reconciliation. Then in such a situation, if you pay the same in September 2022, that is reverse charge pertaining to 21 and 22, which you are paying in financial year 22-23 and also taking credit in 22-23, you need not show the same in 4G figure. Government has already released a press release wherein they have specifically said that only those figures which you have actually paid in 21-22, that should be shown here. So this is my table number 4. In table number 4, I will get my taxable turnover, which I have bifurcated transaction wise. Table number 5. Table number 5 deal with the details of output supplies on which tax is not payable. Say export without payment of tax, which is a mandatory field. Supplies to SEZ without payment of tax. Or supplies on which my recipient has to pay under reverse charge. Say I'm a goods transport agency and I am charging GST at the rate of 5%, on which the recipient has to pay under reverse charge. So I will show that turnover here. Then 5DEF, it deals with exempted, nil rated and non-GST supply. So what I can practically do is that I can club all these exempted, nil rated and non-GST supply together. So your interest income, your examples like sale of land, trading in mutual funds, etc., or any other exemplary turnover, everything will be shown in this field. So table number 4 and 5 deals with your output turnover, output details. In 4, we capture taxable details. In 5, we capture non-taxable details in which tax is not paid. So from out of 4 and 5, whatever is the tax payable, that will get, and this is very important. This table is very important. By filling table number 4 and 5, you will get how much is the tax payable. So whatever details you write in table number 4, tax payable will get auto-populated in subcolumn 2 from table number 4. And subcolumn 3 to 7 is auto-populated from your GSTR 3B. I repeat, subcolumn 3 to 7 is auto-populated from your GSTR 3B. So in an ideal situation, whatever is the tax payable, which is arising out of table number 4, that should match with your tax payment details, which is captured in subcolumn 3 to subcolumn 7, which may be through cash or ITC, which is auto-populated through your GSTR 3B. And if there is a difference, then there should be a reason for that difference, which should be known to you, and there should be a proper justification. In an ideal situation, your 9(2) should be equal to your tax payment details. Moving on, table number 10 and 11. So table number 10 and 11 captures transactions pertaining to financial year 21 and 22, which you have reported in financial year 22 and 23. Let me take an example. Say any amendment, if you have done an upward amendment in September 2022, then the impact of that upward amendment will go in table number 10. If you have done a downward amendment, the impact of the downward amendment will go in table number 11. So from table number 10 and 11, your tax payable amount will come in table number 14, subcolumn 2. And then you have to write the paid amount manually. It is not getting auto-populated. So practically whatever is tax payable arising out of table number 10 and 11, you have to make sure that the same has been paid, and you have to write the payment details in table number 14, subcolumn 3. So in an ideal situation, payable and paid should match. So in your table number 9, payable and paid should match. In table number 14, payable and paid should match. That should be the most ideal situation. And if there is a difference, the reason for that difference should be known. There should be a proper justification. So once I prepared my GSTR 9, and once we have gone through these tables, what we have realized is that it is table number 4, 5, 10, 11. So my 4, 5, 10, 11 gives me my GST turnover for the financial year 21 and 22. And this GST turnover gets reflected in my 9C. Another important table in GSTR 9, which is mandatory this time for 21-22 and which was not mandatory in my previous GSTR 9, is this HSNY summary. So HSNY summary table is mandatory and we have to fill the same. Moving on to my GSTR 9C. GSTR 9C is divided into various parts. Part 2 deals with my turnover reconciliation when I am talking about my outward part, and part 3 deals with my reconciliation of tax payments. So what is this reconciliation? This reconciliation is between my annual return and my books of account, my financials. So part 2 and part 3 deals with the reconciliation of my annual return with my books of account. So friends, when we have filed our and when we have prepared our GSTR 9 and we have prepared table number 4, 5, 10, 11, these 4 tables, that will reflect and that will give my turnover in table number 5Q of GSTR 9C. So turnover as declared in annual return will come here. And my 5A. So table number 5 of GSTR 9C is a reconciliation of my turnover between financials and annual return. My annual return turnover is coming in 5Q, which is auto-populated from my GSTR9. This turnover I have to match with my 5A turnover. 5A turnover is my turnover as per the financials. So in case of multiple GST registrations, entities will have to internally derive their GST-wise turnover and declare the same. So 5A is my financial turnover and 5Q is my GST turnover as per annual return, and all other fields are the reasons for difference between my financial turnover and GST turnover. So what government has done is that either you can write each of the difference, each of the field separately, or they have made all these field optional and you can write everything in 5O. So 5O is nothing but a consolidated details of table number 5B to 59. So in one line, you can write that my difference between financials and GST is say ₹100, and that is on account of table number 5 for various reasons. So you need not specify each of the reason separately in table number 5 of GSTR9C. But practically what we have seen in departmental audits, etc., even if you specify everything in 5.4, you just write that my difference is on account of various reasons, and I opt this optional field and I write the difference in 5.4. The department people scrutinize the entire backup of 5.4. So department people at ground level are scrutinizing the entire backup of 5.4. So it is very mandatory for all of us to maintain why there is a difference between my financials and my GST returns. So when we speak broadly, the difference, see, when will this reconciliation and difference will arise? It will arise only if like some entries in my books of account, but not in returns, or some entries in my returns, but not in books of accounts. Then only this difference will arise. If my entries in both books as well as returns, difference will not come, or if my entry is neither in books nor in returns, difference will not come. Still, there can be a tax exposure. So I will give you just few examples. Let me take first example. 100 rupees turnover I have shown in my books of account financials as well as my GST annual return. No reconciliation difference will arise, but still there can be an exposure. Say I have charged 5% rate of tax instead of 18%. That's the risk area that will be captured, that can be seen only through an health checkup, diagnostic review, not merely by way of reconciliation. Second, Ind AS adjustment. In my accounting purpose, I have done certain Ind AS adjustment. So in my books of account, you will find an entry, but not in the returns. So I will, in my backup, I should maintain that this difference is on account of Ind AS adjustment in books of account. Another reason for difference can be like stock transfer. In stock transfer, I report the same in my GST returns, but not in my books of accounts because it gets nullified. So my returns will show this figure, not books of account. Accordingly, the difference is on account of stock transfer. I need to maintain that backup. Another example can be cross charge. If I have done cross charge, deemed supply from head office to various plants, etc., that will show in my GST return, but not in my books of account. So I have to maintain that this difference is on account of this reason. Further, there can be a situation wherein you have not shown the figure either in books of account or in returns. Let me take an example. Corporate grantee given to related party or brand name usage given to related party without consideration. Taxable under Schedule 1. But you have not shown in books of account, not shown in returns. This gray area, this mistake cannot be found out through a reconciliation. It's only through an health checkup that you will be able to find out. So table number 5 is very, very important of 9C, wherein you have to drill down and maintain a proper backup of the difference between financials and GST returns. Practically in few industries, what we have seen, maintaining the backup is not so easy. For example, real estate industry. When we talk about real estate industries, their GST returns are made basis the demand notes which they are issuing, whereas their books of accounts are based on totally different accounting method, percentage deduction method, completion method, etc. And sometimes it is not so easy to maintain that reconciliations. So what you can do is that in your 5.4, you may write in your backup that this difference is on account of the difference in accounting policy vis-a-vis the GST provisions. Apart from that, another reconciliation which you can maintain is that generally in all such industries like airline industries, real estate industries, and various other service industries wherein the accounting mechanism is totally different, what you can do is that you can prepare a reconciliation basis the billing software details and what you have reported in your GST returns. So you can have a backup with you that whatever I have built, and whenever you build through a billing software. So every different type of industries have different type of software. So from there, you can pull out the data and make a reconciliation with your GST returns to ensure that whatever have been billed, the tax has been paid. It adds value at the time of departmental audit, which we have to keep in mind. Table number 7 deals with reconciliation of taxable turnover. So in table number 5, we have done reconciliation of the entire turnover. My 5P is my books turnover vis-a-vis 5Q, which is my GST annual return turnover. And this 5P amount is auto-populated in 7A. And from this, I'm deducting non-taxable turnover. I'm deducting exempt supply, zero-rated supply without payment of tax, etc. And this taxable turnover, I have to match with the taxable turnover as I have reported in annual return. So table number 7 deals with reconciliation of taxable turnover, 5 deals with total turnover, and table number 9 deals with reconciliation of tax paid. That is, what is the tax payable as per my books of account that I have to mention here, which has to be reconciled with the tax paid in my GSTR9. So 5, 7, 9 deals with all types of reconciliations: turnover, taxable turnover, and tax payment. After covering the various tables, let's move to our case study to better appreciate all these tables. The first case study, in my financial year 21-22, my books turnover is 120 rupees. My books turnover is 120 rupees, which is the correct figure. However, I had shown only 100 rupees in GSTR1 and only 80 rupees in my GSTR3B. So this is an example wherein my correct turnover as per books is 120, but what I have paid in 3B is only 80 rupees. And I have still not rectified the same. I have not rectified the same even in September 2022. So there is a gap. If there is a gap, how to fill my annual return? In this situation, in table number 4, you have to depict your correct amount turnover. So your correct turnover is 120 as per books of accounts. So write in your table number 4, 120. Accordingly, 10.80 and 10.80 is the tax payable, which will get auto-populated in your table number 9. 2. So your tax payable is showing as 10.80, 10.80, whereas your tax payment details will be 7.20, 7.20. From where this 7.20 is coming, this 80 rupees, what you have shown in your 3B is only 80 rupees. So you must have paid tax on 80 rupees only. Accordingly, your payment details is 7.20, 7.20. So there is a gap of between 10.80 and 7.20. And this gap is pursuant to this 40 rupees turnover, which you forgot to report in your GSTR 3B of the previous financial year. And you have not yet rectified the same in September 2022 also. In such a situation, you will have to pay the same through your DRC 03. So whenever any officer looks at what he will look at, like tax payable is 10.80, paid through cash 7.20, and rest is my DRC 03, my annual return will be matched. Moving to another case study. In my financial year 21 and 22, my GSTR1 turnover is 100. My 3B turnover is, my books turnover is also 100. But what I have reported is only 80 rupees. So what I have done in this example is that in financial year 21-22, though my books turnover was 100 rupees, my GSTR turnover was 100 rupees, but I had reported 80 rupees only in GSTR 3B in financial year 21-22. However, in September 2022, I have rectified and reported the remaining 20 rupees. So remaining 20 rupees, September 2022, I have reported the remaining amount. So effectively, I have rectified everything. How do I report this transaction in my annual return? In this situation, please note, in your table number 4, you have to report 80 rupees. Even though your books figure is 100 rupees, but since you have already rectified the same in 2023, in such a situation, you have to report only 80 rupees in table number 4. So what will happen is that what you have reported in your 3B of financial year 21-22, report that only. 80 rupees reported, 7.20 will be shown as tax payable, and my tax payment will also get auto-populated. My GS table number 9 will match. Apart from that, the 20 rupees, but that is the turnover pertaining to financial year 21-22, which you have reported in 22-23. that is September 2022. Please report the same in table number 10. That will be reported in table number 10, 20 rupees, 1.80, 1.80. Accordingly, in your table number 14, tax payable will come 1.80, 1.80, and you have to write tax payment as 1.80, 1.80. So to conclude, if you have already rectified the reconciliation of your books of account and GSTR 3B by September 2022, in such a situation, you have to report the figure in table number 4 and 10 basis the GSTR 3B filed, so that your 4 and 9 matches and your table number 10 and 14 matches. Whereas if there is an actual gap between your books and GSTR 3B, then you have to report the correct figure in your table number 4. In such a situation, in table number 9, your tax payable will be more than tax paid, and accordingly the differential has to be paid through DRC 03. Moving on to another important concept which we have to keep in mind is the spillover effect. That is the turnover of financial year 2021, which I had disclosed in 21-22. So when I am filing my GSTR 3B of 21-22, apart from the turnover pertaining to 21-22, I had also disclosed certain turnover pertaining to 2021. How do I manage this spillover impact while preparing my GSTR9? So let me take an example. What we had done in in financial year 2021, at that time my GSTR1 was 100 rupees, my books was 100 rupees, and my 3B was 80 rupees. And what I had done is that I had reported this 20 rupees gap of financial year 2021 in 3B of 21-22. So I have reported this 20 rupees gap in 3B of 21-22. Now, there are two options which is available with me. One is that I show this 20 rupees which is reported in 3B of 21-22 as it is in table number 4. And second is I don't show the same in table number 4. So the government has clarified through its press release dated 9th October 2019 that my table number 4 should show the transactions pertaining to the current financial year only, that is 21 and 22 only, and not the previous financial year. Accordingly, in our example, what we have to do is that we don't have to report this figure in table number 4 because this 20 rupees does not pertain to my 21-22. It pertains to my 2021. Accordingly, I will write 000. My tax payable will also be 0. But since my tax payment is getting auto-populated through GSTR 3B, this 20 rupees tax payment of 1.80 and 1.80 will get auto-populated in my column number 3. There will be an excess payment which will be shown, and what we have to do is, like while filing GSTR 9C, I have to give a note that this difference is on account of spillover impact of 2021. So very important to note how do we need to capture this spillover impact. Moving on to another important case study. I have paid wrong tax. I was supposed to pay IGST. By mistake, I had paid CGST, SGST, or vice versa. So in my example, I'm taking that I have paid CGST and SGST, whereas I was supposed to pay IGST for 200 rupees. What to do now? Section 77 of the CGST Act, along with Section 19 of the IGST Act, along with circular number 162, it says that if I have paid wrong tax, then I need to pay the correct tax and I can take the refund of the wrong tax which I have paid. And at that time of making the payment of the correct tax, there will be no interest liability. So the section is very clear. Accordingly, in this case, in case study number 4, what we have to do is that I have to report the correct figure. Now, what is the correct figure? What I'm supposed to pay is IGST. So I will specifically write in table number 4, my tax liability is IGST 200 rupees. My tax liability is IGST 200 rupees. This tax liability will get auto-populated in my table number 9. Tax payable as 200 rupees IGST amount, whereas payment is 0. I have not paid any IGST liability, but I had paid wrong tax of CGST and SGST. that wrong tax is also getting auto-populated in my table number 9, that I have paid wrong tax of 100 rupees. So my table number 9 will show 200 IGST is short paid, 100 rupees CGST and 100 rupees SGST is excess paid. I repeat, 200 rupees IGST is short paid, 100 rupees CGST and 100 rupees SGST is excess paid. Accordingly, I have to file my refund application. So I have to deposit this 200 rupees IGST through DRC03, and for the excess CGST and SGST which I have paid, I have to file a refund application. So that refund application will be filed separately through the refund portal, and a specific rule has been inserted, Rule 89(1)(a), which says that the timing for filing of the refund application is 2 years from the insertion of that rule or from the date of payment of tax, whichever is later. So we still have the time to file the refund application. So please correct if there is any case wherein you have paid wrong tax, please pay the correct tax and file refund of the wrong tax paid, and show that wrong tax which you have paid as excess payment in your table number 9. Moving on to another case study. And most important is, before we move on to the another case study, this September time limit, because there are various adjustments which you can take in September return itself. So wherever, if there is any excess tax paid and you are able to find it before due date of September return period, please adjust. If that adjustment time limit is gone, if September due date goes away, and if you are doing all these reconciliation after 20th of October, then the only option will be to rectify the same through annual returns or go for refund route. Otherwise, if you are able to identify all these nuisances before filing your GSTR 3B of September month, you will be able to rectify and adjust the same in 3B of the September month. And that's why September month return is a blessing in disguise. This is for the first time that you are getting an opportunity to file and prepare your annual return before this September month due date. Otherwise, every time an earlier period, whenever for 17, 18, 18, 19, whenever we prepared this annual return 9 and 9C, the time limit for rectification had passed. Now that time limit has not passed. So please prepare your outward and inward reconciliation to ensure that you do maximum adjustment in your September return period. Otherwise, you have to do the manner in which we are discussing. Another important part these days, what government is doing, that like in Telangana, what is happening is that they are scrutinizing various tables of 9 and 9C through some systems logic and issuing the notices automatically. And one of the reason is, like, whenever we have an exempt turnover in my GSTR9, whenever I am showing some exempt turnover in my GSTR9, department says your taxable turnover is this, your exempt turnover is this, and your total ITC is this. All these details are available in GSTR9. So your reversal should have been this, which is not getting reflected. So you receive an automatic notices. So please, while filling your exempt turnover, make sure you write the correct details. Let me give 1 or 2 examples. Dividend income. I've seen various people write dividend income as exempt turnover. It is not your exempt turnover. Dividend, in fact, is just a result of the ownership of the share which you are holding. It is not a consideration for any supply. Dividend income will not come in your exempt turnover in table number 9. It will be shown, even though it is coming in your books of account, don't show the same in your exempt turnover in GSTR9. It will be a part of your reconciliation table in table number 5 of GSTR9C. Interest income. Legally speaking, interest which you have received on account of FD, etc., it's an exempt supply. There is an exemption notification also, and you have to show the same in your exempt turnover. But for the purpose of 42 and 43 reversal, ITC reversal, it is not treated as exempt. So practically what will happen is that you will show the same in your exempt turnover, and down the line, if an automatic notice comes, you have to explain that this exempt turnover is on account of interest income, and as per explanation in rule 42 and 43, this exempt interest is not treated as exempt turnover for the purpose of reversals. So these are the areas which we should keep in mind while filling the details of exempt turnover. The system is linking everything directly with the annual return. Another important case study, excess payment of tax. While reconciling, I came to know that my figure in GSTR1 was 100 rupees. My books turnover was 100 rupees, but in 3B by mistake, I have paid 120. So there is an excess payment. If you are able to reconcile the same by September, please rectify. If not, if there is a delay in reconciliation and you came to know later on, then in such a situation, what you have to do is that report in table number 4 the correct figure only, that is 100 rupees. 9 rupees GST liabilities will come, which will get auto-populated, and tax payment will be shown as 10.80. So there will be an excess payment which is shown. And then pursuant to this excess payment, please file a refund claim. So whenever we are filing as an refund claim, please make sure that this excess payment is reflected in GSTR9 also. If you are not able to rectify the same by September month, due date of GSTR3B, and if still there is an excess payment, please show separately in table number 9. So your 9 and 9C should give a true and correct reflection of your records. General mistake which people have done, B2B transaction reported as B2C or vice versa. In such a case, while filing your annual return in table number 5, please report it at the correct heading. If it is B2C, reported in B2C. If it is B2B, reported in B2B, irrespective of the fact what mistake we have done at the time of filing GSTR1 and 3B. Report it in the correct table. Friends, what we had discussed is that the various scenarios related to the reconciliation. Apart from this reconciliation, there can be various other scenarios wherein there can be a legal exposure, but that are not coming out of the reconciliation. For example, supplies between related party, what we have discussed, usage of common trademark, common management, common infrastructure by related parties, there can be a tax exposure. There are various cases wherein I have done recoveries from employees and there is a tax exposure on recoveries from employees. I don't show these recoveries in my revenue account. I net it off from my expense account. So practically what we have seen is that there are various recoveries from the contractors, employees, which I am netting it off from my expense account. Hence, it is not shown in your revenue account, not shown in your returns also, and no reconciliation gaps come, but still there is a GST exposure. So my preparation of 9 and 9C should not be limited only to the reconciliation, but my endeavor should be to reconcile and check why my actual tax payable is actually paid or not. I should undertake a proper health checkup, diagnostic review, and if there is any gap, this is the best time to resolve and solve all the gaps. With this, I end my presentation and I will be taking the question and answers in the end, posted on the chat box. Thank you.
Thank you, sir. You are giving a good and very crystal clear example to all the participants. Very insightful and very honestly, you have given the classroom example to all those participants. Now I request to Ms. Sweta Valecha to present a presentation on wrongly availed credit in CGST and SGST instead of IGST or vice versa. How to avail credit on B2B invoices uploaded as B2C suppliers, and discussion on all relevant tables of GST credit or GST9 and GSTR9C. Then reconciliation of books of credit versus GSTR3B versus GSTR2A. So now introduce her. Shweta is associate with LKS since 2009 and extends his tax advisory to clients from a broad spectrum in a manufacturing and service sector. Being a chartered accountant by profession, Shweta has a strong accounting background and can assist clients in appreciating the legal aspect as well as commercial behind the transaction. Shweta is also a part of the team of providing assistance to development of GST portal of the Government of India. Ms. Shweta, please start your presentation.
Thank you, Nandaji.
Yeah, thank you. Thank you. And now coming.
Yes, sir. Can you hear me, sir?
Yeah, it's coming.
Oh, thank you. Okay. Good evening, everyone. I don't think it could have been a much better opportunity that we have all got today, that we are discussing all these issues and the learned speakers who have highlighted the issues so far, be it Bimalji or Tusharji. I will just take it forward from there, and I hope that you will be able to benefit from this presentation. Now, as Tushar was discussing more about the outward supplies or the outward transactions, I will be focusing more on the inward transactions or things on which the ITC claims have to be made. Now, the scope that I will be taking up will be the situations where the credit has been wrongly availed, or situations where the invoice, a B2B invoice, has been uploaded by B2C. Then we'll have discussions on the tables of GSTR9 and also practical situations. So to give you a background, what happens in a situation where the credit has been availed as treating a particular inward supply as a local supply instead of it being an interstate supply or vice versa. Now, this can happen majorly because of two mistakes. One can be a mistake by the supplier. The other can be a mistake by the recipient himself. When we talk about the mistake by the supplier could have issued an incorrect invoice, leading to an incorrect payment of tax. A second situation would be when I, as a recipient, would have done a mistake in availment of credit, though the supplies that were mentioned by the supplier were correct. Now, the eminent question that comes up in both these situations is, what happens to the credit that has already been taken by me as a recipient? Am I required to reverse that credit? Secondly, in case I have to reverse that credit, am I eligible to take the correct credit now? Along with that comes the problem of the time limit for taking of the credit, the correct credit. And in case the incorrect credit was utilized by me, then is there a situation where I don't have to pay any interest for the incorrect utilization? Now, as Bimalji had in the starting had pointed out, there is a time limit that has been given for the purpose of availment of credits. Now, this availment of credit can be made till the end of the return filing period for the month of September following the end of financial year. So as of now, the time extension that has been proposed by the Finance Act 2020 has not been implemented so far. So let's presume that this time limit will continue. The September time limit is there, and therefore we are right now we are sitting on a time bomb which is ready to explode. So if there is any incorrect availments that have been done, this is the right time for doing the rectification. Now, if I see the provisions of GST, there is a provision in which, in case the payment has not been made to the supplier, in that case, the recipient has to reverse the credit along with interest. In that same provision, there is also a proviso which says that the time limit specified under section 16(4) will not be applicable in case the credit is to be re-availed. Now, it is interesting to note that this specific provision creates a confusion in the minds of the assessee, that if Rule 37 had to give this exception from the time limit, whether this exception will also be available or will also apply to other situations where I am taking the credit which was earlier incorrectly availed by me. Now I'll take you back to the pre-GST era. In the pre-GST era also, there used to be a rule 4 of the SENVAT credit rule, which used to provide for a time limit for availment of credit, which used to be 6 months or 1 year. A circular was issued in the year 2014, which said this time limit is only applicable for the availment of credit for the first time. It will not be applicable for any availments of credit or a re-availment of credit. So suppose I had availed certain credit, under mistake or due to some clerical issue, this credit was reversed, and subsequently after the expiry of 6 months or 1 year, I realized this mistake and now I want to reclaim the credit. This circular gave a benefit to the assessee that even if the time limit has lapsed, you can still go ahead and take this credit without any restriction. Similar issues were also handled by the high courts as also the tribunals, wherein favorable decisions were given. Now comes the issue whether these decisions or whether this circular will apply in the present scenario also or not. Can I say that the SGST or the CGST credit that I had claimed earlier, which was required to be reversed, and now the IGST credit that I am eligible to take, are they on the same footing? Is it actually a re-availment of the same credit? It might in total amount to the same thing, but at the same time, these are in principle, these are not standing on the same footing. So this, in my view, to rely on the earlier decisions or the earlier circular is going to be litigious until unless there is some clarification from the department in the GST regime itself. Similarly, in case assuming I say that this earlier decisions are not applicable, can somebody challenge this only on the basis that it was my substantive right to take this credit, and merely because a procedure has been prescribed of availment of credit in a particular time limit, will this credit be lapsed? In this situation also, the courts have consistently held in the past that availment of time or in availment of credit is not an inherent right. The government is empowered to impose conditions, restriction, time limits. So that also will not be on a very strong footing. If that be the case, in my view, right now is the time wherein whenever you feel that you have been able to find out that such kind of issues have arisen, to take necessary actions right now in this month itself. On the question of interest on incorrect availment of ITC. So in our example, an incorrect CGST, SGST ITC was availed. Now, Tushar was mentioning about section 77 and section 19, wherein in a situation where, say, the credit was wrongly deposited in a wrong head, there is no requirement to pay the interest. Now, interestingly, these relaxations have only been made on the supply side. Similar changes have not been made when we talk about the provisions relating to interest on wrongful availment or utilization of credit. So as on date, the law as it stands, in case you have taken some credits incorrectly and you have utilized them also, there will be a requirement of payment of interest. The moment you have to, say, rectify these mistakes, proper declarations have to be made in GSTR9, wherein you have to mention it in the applicable rate tables of 12 or 13. Now we come to the second topic as to how to avail credit on invoices which were rightly B2B invoices, but the supplier had inadvertently reported them as B2C. Now, if we look at the provision or the section which allows us to take credit or puts the conditions for that, till some time back, till 2019, at least, their provision never mentioned anything about the credit should be mentioned in the GSTR 2A or 2B of the recipient. So assessees used to take an argument that as long as the tax has been deposited by the supplier, merely because they are not, say, reflecting in my 2B or 2A, I should be entitled for the credits. A lot of decisions were given in the same context. Thereafter, changes were made in section 16.2, and there was also a rule 36.4 which was introduced. This rule has been subjected to a lot of litigations in the past, and recently it has been amended again. Now, if you see how the rule has evolved, is that initially there used to be no restriction that this credit that the supplier has or the invoice that the supplier has mentioned in its GSTR1 should come in my GSTR2A also for me to take the credit. Then they introduced this condition that it should be reflected in my 2A. Then led to this problem of 36.4, in which some buffer was given to say the recipient, that in case any invoice which you are physically in possession of, but which has not been, say, uploaded by the supplier in the correct form, or it has not been uploaded at all, then also I could have utilized, say, 20%, 10%, 5%, as the case may be. In that buffer, I could have claimed the credit, treating it to be a missing invoice. Now that rule became subject matter of dispute in various decisions. And in fact, in few of the high courts, questions were also raised as to why should an assessee, why should the recipient be penalized for an action done by or for an incorrect methodology followed by the supplier himself. Now, as on date, all these challenges, while they were ongoing, the government amended the act itself. There was also a challenge on the applicability or the constitutional validity of this Rule 36(4) and whether the same is going beyond what the act has provided for. Now, if we see the section which is a part of the act has been amended to specifically provide that the details of the invoice or debit notes should have been furnished in the statement of output supplies communicated to the recipient in the manner specified in section 37. So now it has been inserted in the act itself. So Rule 36(4), which was earlier being challenged as being going beyond the act, now that limited point is no longer applicable. And the moment my invoices have been incorrectly reflected by the supplier will lead to a situation where my credits will get blocked. So in this situation, I should take this matter up with my supplier. I should be in a position to identify which are these invoices on which my credit is getting lapsed or is getting lost. And I should go to my supplier and ask him to amend his table and in such a manner that this particular invoice is correctly reflected as a B2B invoice for me. Failing which, my credit availment will be questioned. So these are the restrictions that I was mentioning about how it has evolved. Rule 36(4), the benefit of buffer of 20, 10, and 5%. Then there were constitutional validity of Rule 36(4) itself was challenged. And now the section itself has been amended. This we have covered. Now we'll just go through, since I think we are already falling short of time, we'll just quickly glance through the relevant tables of GSTR9 and 9C relating to invert supplies. Now, a background has already been given by Bimalji, so I'll just run you through a few of the tables. The invert supplies basically, in contrast to the outward supplies table, in the invert supplies table, the focus is more on the tax and not on the value. So value columns are not there in most of these tables. And till 1819, the information that had to be given for input services or capital goods, there was no requirement to give a bifurcated figure, and the entire figure could have been given as in a single go. Now, if we see, table 6 deals with all my ITC availments, whereas table 7 talks about all my ITC reversals. Table 8 is basically an auto population from my 2A and a comparison with my 2A table. Then for the last, say, financial year's say figures or the invoices, whatever credits are being taken or reversals are being made, those are to be reflected in table number 12 and table number 13. Now, a quick glance on table 6. So 6A is nothing but, say, an auto-populated figure which will come from your GSTR3B, and this entire figure will be on a financial year basis. So accumulation of all the 3Bs that you would have filed, this figure is going to be generated. 6B is now after 6A, everything else has to be filled in by the assessee himself. 6B is talking majorly about the invert supplies of inputs, capital goods, input services, barring cases of imports or cases where the tax has to be paid on reverse charge. Except those, so basically all the forward charge transactions, those cases have to be reflected in 6B where the credits have been availed. 6C is talking about those situations where the input supplies have been received from unregistered person which are liable to reverse charge. 6C effectively right now, since it has been put on hold, this is not applicable, and I have not seen anybody who's filled in this table. 6D is talking about invert supplies from registered person which is liable for reverse charge. So suppose you are receiving any services from a lawyer, then the GST amount that you would have deposited and the ITC taken thereof has to be reported in 6C. 6E is talking about import of goods. is talking about import of services. Now, interestingly, import of goods includes any supplies received from an SCZ because that is treated to be outside the country. Whereas when it comes to import of services, any supplies received from SCZ unit, those are not to be reflected in import of services in 6F. Those have to be given in 6B itself. 6G talks about ITC received from an ISD, or 6H talks about amount of ITC reclaimed. Say suppose the payment was not made to the supplier within 180 days and that credit amount had to be reversed. Subsequently, you made the payment and now you have to reclaim this credit. So that figure is going to come here. 6I is nothing but accumulation of 6B to 6H. 6J will give us the difference between the auto-populated figure from 3B and this subtotal, which is 6I. Now, 6KL are talking about situations of transitional credits. 6M is majorly, say, any credits that is not covered in the above situation. Say, suppose you have taken over a business and the ITC of that business you've got in terms of your ITC, in terms of the ITC02 filed by that by the supplier. In that also credit will be mentioned here. Now, if I do this cumulation of the entire 6, say K to N, that will be mentioned in 6N. So your total ITC will be reflected in 6O. Moving on to table number 7. Table number 7 is talking about various reversals in the sense of payment not made in 180 days, excess ITC received from ISD, reversal for usage of inputs or input services towards exempted supply, reversal of ITC on capital goods towards exempted supply, or any ineligible credit that you would have taken, any reversal of Tran 1 or Tran 2 credit, or any other reversal that will also be mentioned here. Now, this amount of total ITC that has been reversed will go in your GSTR9C and it has to match with the figure that is appearing in table number 14 of our 9C. So a difference between the credit availed in table number 6 and the credit reversed in table number 7 is the net ITC available for utilization. Now, table 8, this is basically a figure that is coming from your GSTR2A or any other credit, say, which was pertaining to the last financial year, but availed in 3B of April 22. Moving on to, the next two tables, which is basically 12 and 13. These are ITC availments or ITC reversals that were to be made in April last financial year, but were made in the period of April 22 to September 22. Now, 9C is again a reconciliation that has to be prepared of all the figures or the differences that are arriving between your books of accounts and these in the GSTR9. Now, this is just a brief background about the tables, various tables of GSTR9 relating to the inward supplies. We can now move on to the next thing, which is some practical situations and how to deal with them. We've taken few, say, examples. In the first example, if you see the ITC which was taken in the monthly returns, which is in GSTR3B, was 100 rupees. And the ITC which was actually booked in the books of accounts was 90. Now, what is it that the impact of this will have on my GSTR9? Now, from 3B, the figure is going to land in my 6A. So my 6A figure will say 100, whereas in my 6B, I will be mentioning a figure of 90. So there will be a difference of 10 rupees. Now the question is, how is it that I should reflect this difference of 10 rupees? One of the option is that I get my DRC03 in a manner that I pay this additional 10 rupees such that tomorrow, whenever a reconciliation is being prepared in 9C, I have this as a reconciliation figure that my credit availments, though in 3B I have incorrectly availed 100 or excess of 10, the same has been paid back through my GST. This will enable me to satisfy the auditors and to ensure that I am on the right side of law. Few examples that I have not mentioned in the slides, but I would like to take up is the spillover effect with the Bimalji was also mentioning. Say suppose in my GSTR 3B, or rather I'll say GSTR 2A, the figures that were appearing as the invoices which have been given by the suppliers were for rupees, say 100. I did not take credit of the entire 100. And I took the credit in April 2022. Now, if you see there in my GSTR 3B for the financial year 21-22, the figure of availment of credit will be 0. Whereas in my GSTR 2A, this figure would be, say, 100. So there is going to be a difference. Now, similarly, for financial year 22-23, my GSTR 3B will say that there is an availment of 100 rupees, whereas in my GSTR 2A, there is no figure that is appearing. So in this case, there will be a difference between the figures that are coming in 6A and the figures that are coming in 6B. So again, this has to be properly accounted for in my 9C. Another reason, in fact, when we conduct these audits, we realize that if you see the comparison of figures that are appearing in 2A or the dumps that are given in the Excel file from the portal, hardly there is a situation in which all my figures in, say, scenarios of 2A or 8A or the dump will ever match. If you see all these examples, these are classical examples where there will always be a difference between the financial figures and the figures of 2A. So I should take proper steps right here such that my availments are not questioned subsequently. So with this, I would like to close my presentation. We can take up the question and answer in the question and answer round.
Thank you very much, Sutam. Now I request to Mr. Pawan Arora, our co-chair of the Indirect Tax Committee of PhD CCI, to present his presentation on GST annual return, GSTR9 and GSTR audit report, that is GSTR9C, open issues, challenges and way forward. Then responsibility of auditor for GST audit, precaution have to be made by filling the GSTR9 and GSTR9C, late fees for delay filing GST, etc. So I want to introduce him. He is a chartered accountant and lawyer. He is a partner of Athena Law Associates. He has over 11 years experience in advisory litigation matters for indirect taxation and successfully handled taxation issue on clients across various business verticals. He has extended his insights on advisory and litigation, GST, VAT and service tax. Pawan Arora, sir.
Thank you, Nandaji, for the introduction. Good evening, friends. As my co-speakers have already gone through all of you from each and every column and its relevance of GSTR9 and 9C, what precautions you have to make, they have already discussed. So I will discuss that what precautions we should take or what challenges are practically coming through a litigation, because in last 2-3 years I am handling so much I have handled so much show cause notices which are only issued based on the 9 and 9C. So whatever figures you are reporting in GSTR9 and 9C show cause notice are coming based on that. So what precautions we should take care and how we handle those issues, I will discuss that point. So see, let's first try to understand why we file all these returns and what is GSTR9 and 9C. GSTR9 is a summary of the GSTR1 and GSTR3B which we have filed over the entire financial year, and GSTR9 is a summary return. This is the concept of earlier VAT regime period where the most of the states get filed annual return and they do the assessment based on the annual return filed by us. So similarly in GSTR9, the department asked for the data of the entire financial year. So the governments are mainly as in the GST, this is a self-assessed tax regime liability. You may say it as self-policing, that you have to assess your own liability. You have to avail the credit as per the law available under the GST. So whatever condition are providing in section 16, after satisfying those conditions, you have to avail the credit by your own self. You have to self-assess your input. Apart from that, government wants that you, whatever self-assessed you have done, you have self-assessed, you have to report in the returns. So first we report our outward liability in GSTR1. We report our summary outward liabilities in GSTR3B because we have to discharge our liability through that. And we summarily report our input tax credit in GSTR3B. But on the back end, as now system is so much robust, that your inward details of credit is now available with the government through the GSTR1 filed by your supplier. So government have all the details back end of your input tax credit, which you have availed, but you have to report it by your own. So therefore, if you see that if the credit is challenged of ineligibility, so that is based on 2B, which is available with the government. Now, what precautions we have to make while filing GSTR9 and 9C? I have seen that GSTR9 picks some figures from GSTR1 and picks some figures from GSTR3B. Might be because of nowadays, maybe there is no system error, but earlier there was a system error. People are not able to understand that what to do with these differences. So as I said in my first statement, that you have government wants a revenue, correct revenue from you. So government is interested to protect their revenue. So if you have correctly paid the tax, but still because of the format of the return or because of the accounting you have done or because of the reporting in GSTR 3B and 1 you have done, there is some difference coming, which does not impact
Yeah. Am I audible? Nandaji, am I audible?
Yes, sir, you are audible. Pawan sir, your video is not coming.
Am I audible, Nandaji?
Yes, yes, you are audible, but your photo is not coming. Video is not coming.
Video is not coming.
No,
It's coming now.
now coming. Sir, you are coming. Pawanji's video and
Pavanji looks like to me.
that's coming.
he
Start.
has joined.
Yes, sir. Yes, sir. Sorry
Let
for the
him,
technical glitch.
let him start. Let him
Yes,
start.
yes, sir.
Okay.
Yes. Okay.
hello.
Yeah, yeah. Yes, sir.
Sorry, sir.
Continue. Okay, no
Electricity
problem.
cut off.
Continue, sir, please.
So whatever differences we are reporting in our GSTR 9 or 9C, we must take care that if it is not impacting your financial point, then we should try that not to report any difference and try to adjust that difference within the correct reporting or try to report in the available columns. Because what I have seen, that even there is no financial or tax liability impact, but you have shown in difference column, GSTR 9 and 9C difference column, if you have shown the differences, as Tushar has also said, department is issuing notices based on that differences. Because of that differences, what I have faced an issue that I have, first of all, audit has happened. Client has explained everything to the GST auditors, but there is still a show cause notice from the department. Now we have drafted a reply, given a detailed explanation that why there is a difference, but still department is not able to understand. They are still of the view that no, this is a differential liability which you have to pay. And ultimately now I have to go for the first appeal. So my point to here to highlight is that if it has a financial impact, then pay through DRC 03, separate DRC 03 and report in the GSTR 9 or 9C itself. And if there is no tax liability impact on the differences, then please do not report in the difference column. And if still by reporting or auto populating of the figures, the differences are coming, then please try to check the correct column where you can rectify those errors rather than reporting in the difference column. Because I have seen very rare officers are understanding those issues, that if the difference column is showing any difference, then they are making of their view that you have to pay that liability. So it will unnecessarily increasing the litigation. So please be cautious while you are filing GSTR9 and 9C, and if there is a difference coming in the difference column having no tax liability impact, then try to remove that from a difference through other columns rather than showing in the difference column. This is the one thing I want to discuss. Now, as Tushar said that deemed supply, schedule 1 supply like free of supply to the related persons or the our branch of other states, this doesn't come in the financial statement. And because of that, we are not reporting in our GSTR9 also or GSTR9C. There is a separate column for that. So please assess your correct liability. Nowadays, department is asking taxes on the services provided to your branches of other states. So please assess your liability correctly under the schedule 1 and discharge it. And if you have not discharged during the year, then assess is now paid separately to DRC 01. And there is a particular column in GSTR 9C. So please fill that column accordingly and discharge your liability. Interesting one point which Shweta was also discussing about the ITC, and she has shared one circular of the CBIC where they have said that the limitation shall be applicable on the credit first time availed and not the second time. Here, very interesting problem which you may face, that your supplier has not filed GSTR1 till September of the 2022 for the financial year 21-22. So now question may come, how to handle those credits, because supplier may fill the return subsequently, but this is the last month of availing the credit. So how to deal with that situation? See what the section 16 provides. Prior to 1st January 2022, there was a condition that supplier has paid the tax. As far as reconciliation with GSTR1 is concerned, that is only through rule. And as we all of know that that rule was already challenged, that it is beyond the mandate of Act. So, but with effect from 1st January 2022, the ITC matching was made compulsory under section 16(2)AA. So from 1st January 2022, the reconciliation from section from GSTR1 become mandate. So now in this GSTR, in this annual return, we have two separate periods up to 31st December 2021, where matching with GSTR1 was not compulsory through an act, and period from 1st January 2022 to March 2022, where the matching with GSTR1 is compulsory through act through a section 16(2)AA. But let's assume that if there is a gap that your suppliers still have not filed their returns. So as Shweta is also showing circular, but she said that this could be a litigative. But my suggestion in that case is that if your credit is not still reflecting, then at least avail those credit in September month and reverse immediately. And whenever your supplier uploaded, then you may think upon not taking the credit. As I know that GSTR 2B will separately show that your supplier has filed a return, reporting in GSTR1 beyond the limitation available under section 37. Therefore, credit will not be available. There is a separate column, and there is a separate column in 3B reporting also. So definitely through return, they will block your credit. But you may think upon that the limitation provided under section 16 is that credit should not be credit should be matched with the 37 one. And the 37 one, if filed by later, then section 16(4) does not provide that credit shall be available only if that a supplier has filed its GSTR1 within a time limit. So there is a area of, maybe there is an area of litigation, but there is a, I am saying that there is an area of scope that even where the supplier has not filed the GSTR1 within a time limit, but filed a later period, then there is a scope to avail the credit in that case. So what at this point of time, what we can do in GSTR 3B of September 2022, we can take the credit and immediately reverse it. And whenever the credit will be reflected in the GSTR1 by the supplier, we may think upon of availing the same or not at a later stage. So this is one of the point. And one of the question which has been put in the topic, that what is the liability of the GST auditor? See, as the GSTR9C is not now mandatory to get it audited from the statutory auditor. So today there is no statutory liability of any chartered accountant who is assisting you in filing the GSTR9C. But yes, there is a moral liability of the auditor that yes, he has checked in that spirit only as he was doing earlier. So there is no statutory liability of the GST auditor. Now the liability is on the management, because this has to be, 9C has to be self-certified. So only the liability of the auditor is the moral liability rather than statutory liability under the CGST Act. And the late fees is 100 rupees per month as was earlier. So if I concluded the entire discussion of the today's session, including my point, is that whenever you are filing your GSTR9 or 9C, this is, as Bimal sir in his first line said, that it is not a mathematical reconciliation only. But if we consider that we have to comply with the law, but while we are doing this mathematical reconciliation, we should take care of this mathematical reconciliation at the time of reporting the figures in the GSTR9 because notices are coming through those online system scrutiny also. So to avoid all these unnecessary litigation, please take care of the columns which we are filing in the difference columns. With that, I open the session for question answer. Nanda sir.
Hello. I request to Bimal sir, please.
Yeah, hi.
Yeah, yes, sir. Now I will start for a question in the session of all
Not an
the.
issue. Just allow me. Just allow me. Okay. Thank you to all the learned speakers, starting with Tusaji, Sweta, and Pavanji. There are 3-4 things which I thought I must reiterate and repeat for the sake of clarity. The first point, wrongly charged taxes, and subsequently you are paying the correct taxes. What are the questions when you have wrongly charged? See, in my example, which I gave to you, from Delhi to Maharashtra, IGST leviable, right? But if wrongly charged CGST and Delhi SGST, and that is being collected and paid also. Question was, and which I posted also in the beginning of theme presentation, that do I require to pay correct taxes? Can I defend myself that I have already paid the wrong charge taxes? See, we have to pay correct taxes. Whether interest leviable on this payment of correct taxes, no interest leviable. And for getting refund of wrongly charged taxes and paid, 2 years start from the payment of correct taxes. That is what being discussed by Tusaji. Coming to the certain point, which is again food for thought. I have raised my invoice with IGST Delhi to Maharashtra. I have also correctly filed my GSTR1. It is correctly coming as a IGST credit in your 2A or 2B. But problem is that being recipient, you have taken credit under wrong bucket, CGST and SGST. So question is, there will always be mismatch when you look at your credit avail in 3B versus credit auto-populated in GSTR2A. What to be done? What are the way forward and mechanism? It is only wrong bucket, but within the GST, we know it's a dual levy. A portion, a 50% portion goes to central, balance portion goes to SGST. What is the way to correct it? I'm just giving food for thought. Just think on those lines. Maybe that maybe another way to correct it. See, if you have taken credit under wrong bucket, then your 3B is a wrong bucket. You have taken under CGST and SGST, and that is going to be auto-populated in table 6A. Going to be auto-populated in table 6A. Now, what to be done? Table 6B of GSTR9, you can minus CGST and SGST and add IGST. I'm giving food for thought. Listen very carefully. If you have taken credit under wrong bucket, then what happened? Table 6A getting auto-populated from GSTR3B. And then it is getting auto-populated as a CGST and Delhi SGST, whereas it should have been IGST. So I'm just giving one idea that, okay, in table 6B, you minus this wrong credit avail in wrong bucket and plus IGST. So this 6B is again getting auto-populated in your table 8B of GSTR9. Their IGST credit would be coming. So it will match. It will automatically match. Now, this you are doing internally. So there may be period gap. There may be some kind of, period gap. Now you are reconciling through GSTR9 and 9C. What I will suggest you, do this correction, intimate to the authority that this is what I made the mistake, which is now I'm correcting by way of process which I disclosed to all of you, so that you are bona fide. Coming back to the related question therein, if it is a wrongly availed credit, not utilized. Wrongly availed credit, utilized. So interest implication. So Sweta has covered this point very well, that wrongly availed credit, but not utilized, no interest leviable. And that too from retrospective date, July 1, 2017. But if it is utilized, then of course exposure will come, because section 50 talks about non-payment and short payment. And if this wrongly availed credit resulting into non-payment or short payment, then interest is going to be leviable. So we have to really work out that way. As coming to the third component, which Pavanji was doing and he was discussing, and even I wanted to have clarity on that point, whether our credit is really dependent on GSTR2A. My supplier, I'm talking about financial year 21-22, time period still open. If it is not coming in 2A or 2B, you can go back to your supplier and tell him amend his GSTR1, time period is open, so that it is correctly reflected in GSTR2A or 2B of the recipient. But let's assume technically and legally, credit is dependent on 2A or 2B. This is the big question for all of us together. And we have discussed this matter in the past as well. Just to summarize in quick 1 or 2 minutes, to my mind, my credit is not dependent on GSTR2A until 31st December 2021. Yes, my credit is now going to be dependent on GSTR2B from 1st January 2022. So there are 5 conditions now. As a buyer, you should have tax invoice. You must have received goods and services. Your supplier must have paid taxes. And being recipient, you are regularly filing GST return. And 5th condition, which got introduced, which is prospective condition, that your credit must match with GSTR2B. There was no reference of GSTR2A, no reference. So even if for the past period you are getting notices, scrutiny notices, so-called notice, let's defend it. I'm giving you one Supreme Court judgment. And in that judgment, it is being stated that GST is a self-assessment tax. Let me give you the background so that you can understand that part as well. Bharti Airtel, for the period July 17 to September 17, July 17 to September 17, what they did, they have paid their, they have filed their GSTR3B and paid the liability through e-cash ledger, 930 crore. I'm not talking about small amount, 930 crore. And they did not use their e-credit ledger. Why they did not use? Problem with them was GSTR2A was not available for that impugned time period, because 2A came sometime September, October 2018. They pleaded before Delhi High Court, my lord, I want to revise my GSTR3B, and whatever I paid through e-cash ledger, I should be allowed to be paid through e-credit ledger, because I was having enough credit for that impugned time period. But I came to know only when GSTR2A was given by the government, and GSTR2A was one of the machinery provision, right? Honorable Delhi High Court has allowed that 3B can be revised. It can be paid through credit account, and whatever we have used cash should be refunded back. SLP was filed before the Honorable Supreme Court. What Honorable Supreme Court has said, listen very carefully. Say GST is a self-assessment tax. And this GSTR2A, which you are talking about, pleading about, that this was not available for July 17 to September 17, it is only facilitation. You could have taken credit as a self-assessment tax. Who has stopped you? Since you have exercised your option of payment of tax through e-cash ledger, now you can't revise your GSTR3B. So when Honorable Supreme Court is saying 2A is only facilitation, then such scrutiny notices and so-called notices is of no use. And we are of the view that we can always defend that my credit is not dependent on GSTR2A. This is legal side of it. But what happened for 21-22? If it is not coming, go back to your supplier. Tell him to correct his GSTR1 so that it is getting auto-populated, and for future sake, you will not be getting notices. So maybe 3-4 important aspect I thought of passing on to all of you. Time is a pause. We can take questions and then we'll request my speaker to answer those questions. So you may post your query in a chat box and I will start asking those queries. So Tushar, you can also switch on your video so that we can, handle this question answer session. I must compliment to all three of you. Today we got 500 plus audience, and throughout this webinar they were sitting. Maybe because evening time they have to close the office, they want to go back. That's the reason 40-50 has logged out, but otherwise 450 participants still sitting and watching us. So I'm taking a question of Pankaj Kumar, and it is on credit avail. So Sweta, you may take this query. Can CGST, SGST wrongly availed as IGST? Reverse to DRC03 in 2021. 9C in 9C can be availed as a CGST, SGST in 9C of 2020-21 or in current financial year of 21-22. I am not clear what he's saying that CGST, SGST wrongly availed as IGST, and that is being reversed through DRC03 in 2021 9C. Can we avail the correct credit in 2021 or 21-22? Maybe this is the question. If Sweta, you have understood it.
Maybe the question is because of some practical way that you have suggested, some ray of hope that you have given to the assessee, that there is a mechanism of reflecting it in 8B and then possibility of taking this credit again. I think that is the question.
So Sweta, what do you think? The way I suggested, do you find any ray of hope?
The ray of hope, definitely. In fact, how beggars can't be choosers, no? This is the way that we have to, some way that we have to find out.
Okay.
But practically, yes, manageable.
Okay, manageable. Okay.
Yes.
Okay. From Hardesh Kumar. Invoice available in 2A for financial year 2021, but claimed in 21-22 when we received the goods, where we reported in GSTR9 table. So he's asking where to report such credit.
So You can take this credit in table number 12.
Table 13, Sweta, if availed. See,
So
if
it's table 12.
any credit of 2021, which you are availing in a period of April 21 to September 21, then there are two tables. Table 12 talks about reversal.
So say table number 13. This is availment.
Talks about avail.
Availment.
Availment.
ITC availed for previous financial year, right?
All right. Tushar, for you, it is different question, not from GST, but now 360-degree GST and income tax getting connected. So I'm on the, Prabjot Kaur asking one question. Sir, can you please also update regarding new clause 44 in form number 3CD of income tax, wherein GST purchase details are required to mention. C has written just one or two lines.
Sir, I think that
clarity.
So in fact, we can have a separate session itself on that particular clause, how to prepare that particular clause. So in a nutshell, what I would like to suggest is that after seeing that particular clause, and after, even if you see the guidance note, etc., issued by our institute, etc., it is very important for us to have a proper details of all the vendor-wise details. How much purchases we are doing from a registered vendor, how much purchases we are doing from unregistered vendor, how much is exempted, how much is non-taxable, taxable, etc. So there should be a complete system wherein you are able to record your entire inward transaction, and in such a manner that all kinds of reports which is required to be prepared either for income tax purpose or for GST purpose or for your GST audit, departmental audit purpose or any purposes. In fact, even if you club this report along with the new GSTR 3B format, wherein they have suggested you to match everything from GSTR 2B, and you have to, like, for even for ineligible credit, you have to firstly avail and reverse, etc. So it's a complete mechanism of preparing the data in the most exhaustive manner. So we may even propose, Bimal sir, a separate session on this, wherein we do a great amount of brainstorming on how to prepare this. This is a practical challenges which many people are.
Tushar, shall I tell you one thing? Tushar, shall I tell you one thing? And to all the participants, it's an eye-opener, I'm telling you. While preparing our income tax ITR, what we used to do, this is public platform. I am not getting into much detailed part of it, but I'm alerting each one of us together. See, what we used to do, we used to book expenses, right? In our PL account, debit side. Now, what government is willing and they wanted to cross-check. If tax audit is applicable, then tax audit is applicable those who are having good amount of turnover with them. Right? So what government is expecting in tax audit report, that you should identify and bifurcate your all expenses from registered supplier, registered in GST, and unregistered supplier. And then registered supplier, they are bifurcating that whatever you purchase from composition dealer, whatever you purchase from that is exempted supply, and whatever is a normal supply which you are purchasing from a registered supplier. Now, what government going to check? They're going to check your GST credit account that you're purchasing from registered supplier, and 360-degree matching with your ITR. And if proportion of your expenses is from unregistered supplier, that is too high in any business proposition, then it's a wake-up call for you. You may be claiming deduction under IT because you are showing the expenses from unregistered supplier. They will definitely come back to you and say, okay, this much from unregistered supplier. So you understand the meaning of unregistered versus registered. So government want to have, you should have, most of your purchase from registered supplier. Why section 9 subsection 4 could not succeed in GST? It was from unregistered supplier, right? And there was a lot of hue and cry. But over a period of time, government vision is move to organized sector. You should record and account for your actual transactions. So I'm just giving you way forward. We have to really think from a holistic perspective. It is not only income tax perspective. It is going to impact your GST. Maybe you have availed a huge amount of credit, but not correspondingly shown in 3CD tax audit report, or vice versa. So these are the pointers, but I do agree with Tushar-ji. It requires extensive presentation on this point as well. So we may consider this presentation very in quickest time manner. 30th September is the last date. I do not know which day would be convenient, but we will try to make it. Now, Pavanji, one question to you, and somebody has asked in this question answer box. I missed that. A lot of queries are being posted. So. Okay, he's from finance, some company, sir. HSN details of inward supply are required to fill in GSTR9 for 21-22.
I think this has been made compulsory.
Made compulsory?
Yes, yes.
For inward supply?
So it's outward only which has been made compulsory, but Shweta ma'am can throw more light.
No, it's only for outward, not for inward.
Only for outward, sir. Acha, are you asking for inward? No.
Okay.
Only for outward.
Outward.
Nanda Sharma is asking one question, Shweta, sir. RCM tax already paid for transporter, but we have not taken input credit in same in 2020. Then quite obvious he is looking for credit in current financial year. Is it possible? Can he take credit?
Don't even have a ray of hope here.
You can suggest him how it is possible.
I don't. आपके पास है तो बताइए, मेरे ख्याल से तो नहीं. The moment RCM tax liability has been discharged, I don't have any mechanism for taking this credit now. The time limit has already elapsed.
Okay.
GSTR1 makes supplier, even if I consider the supplier to be registered, his invoice would have also come. That time limit has also expired. So I don't see a way.
I'm suggesting one way. Please say yes to Sam.
Yeah.
We must enjoy this open house session. It is not, we must enjoy, because a lot of things are happening and we are learning from each other. See, if this is RCM from registered supplier, then quite obvious time period gone, section 16, subsection 4 gone. If it is from unregistered supplier, taxes are being paid. What is the eligible document? Self-invoice, as per rule 36B of CGST rule. If he is generating self-invoice, today is dated, of which taxes are being paid in the past, then the self-invoice which is dated today, time limit is open for him to avail the credit. Only non-compliance would be section 125 general penalty.
Yes.
Maybe this is the way we can work on from unregistered supplier. But from registered supplier,
maybe we can ask this question further, whether this is a case of unregistered.
We have given
will go on,
everyone. We have given food for thought to everyone.
Yeah.
So to start to you, again, Anil Vaskar is asking time limit for claiming ITC for financial year 21-22.
Sir, it's actually a very, very important question, because there is a lot of confusion in respect of availment of credit pertaining to 21-22. What is the time limit? See, in the last Finance Act, government had proposed that they are going to extend this time limit till 30th of November, but please note that the requisite notification has not been issued as on date. So as on date, the time limit for claiming ITC for financial year 21-22 is due date of your GSTR 3B of September month, that is 20th of October. Similarly, even for your GST credit notes, etc., the time limit is due date of your September month return. It has not been extended as of now. As on date, please take September as the cutoff date, the way we used to do it for the previous years.
Okay, to make it more interesting, Tushar, the amended change now talks about till 30th November.
Right.
Section 16, subsection 4. Right?
Absolutely.
Let's assume hypothetically that 30th November is being made implemented.
Right.
And it is not relevant to 21-22. In general, we are discussing. In general, we are discussing. So this question I posted to senior government officials. I got different answer. That's the reason I wanted to make it interesting for our audience today. If 30th November is the last date assumed.
Right.
Let's assume financial year 22, 23 we are referring to.
Absolutely.
Then it is 30th November. For
Absolutely.
sure. For October month, GSTR 3B is being covered.
Right.
What about November month, November 23 return is also being covered by this change of 30th November under section 16, subsection 4.
Sir, it's in fact a very, very important question. So the question which you are asking is October is covered, no doubt. October month period is covered. Now November period. In my books of account, I recorded the invoice in my November month. Now I am filing my November month GSTR 3B by 20th of December. I am filing my November month GSTR 3B, though even in my books of account, I have covered all these past year invoices in my books of account in the month of November, but the November 3B is being filed on 20th of December. Now, what is the date of availing credit in GST? If we compare it with pre-GST area, what used to happen in excise? In excise, I used to maintain a Senate credit register wherein all the availment process used to happen in my books of account. Return was only a disclosure purpose. But this is not the case in GST regime, to my view. In my view, when we are talking about GSTR 3B filing, that is the triggering event for either payment of tax or availment of credit. And this is the way the entire tax structure has been framed and law has been framed. So even if I record the same in my books of account in the month of November, since I will be filing my November 3B on 20th of December, my availment will happen only on 20th of December, which will be after 30th of November. So effectively, this is nothing but 1 month tax period relaxation only. And if we even see the agenda notes, because all these amendments which are proposed in the act, it's only once the GST Council approve. And one of the best thing which is happening in GST is that there is always a council meeting, and then the minutes of the meeting is made public. Though it takes a lot of time, but it is eventually made public, and they keep on writing the discussion there. So that's also give us a hint what was the intention behind, and everywhere you are finding that they want to give benefit for 1 more tax period. So effectively, to my mind, it's October tax period only. And the fact that your October return, instead of filing on 20th of November, if you delay it by till 30th of November, that case is covered, but not your November month return.
Okay, not an issue. We'll take up this question in subsequent webinar. Pavanji, for you, vendor issued a credit note in March 2022. Vendor has issued a credit note, but fails to upload in GSTR9 at all. So credit note was issued in March 2022, but he has failed to upload the same in GSTR9 at all. Will recipient liable to reverse ITC in such case if they have booked the credit note in the books of accounts?
Very interesting question. It is not like a availment, so we have to reverse it. Even it is not appearing in your GSTR1. My view is that you have to reverse it because he have taken the adjustment from the government. You must have to reverse it. And if it is not appearing, it doesn't mean we will take it like a credit. If it is appearing, then we are only availing the credit. So therefore, if only credit note is appearing, then only we will reverse. We should not do like this here. So we should ideally reverse the credit if we have booked that credit note in our return.
Okay, Sweta, for you.
One more addition, sir. There could be a case of commercial or which is called accounting credit note, where the even supplier does not take the adjustment from the government and we do not reverse the credit. But here, since he has loaded the GST element on that credit note and he may have taken the adjustment from the government, we must reverse it.
Okay. Sweta, another question which is again, topping up after Supreme Court judgment, still this guy is asking this question. RCM on ocean freight is required to be paid or not in 2022?
As long as it's a CIF contract, the value has been included for the purpose of payment of customs duty, definitely not required to be deposited, sir.
Okay, but still he's asking this query, right? Okay.
Even he should claim the refund of the previous period which he has paid.
In case he has paid.
Yeah.
Subject to unjust enrichment.
Unjust enrichment is a major issue there.
That's the major issue.
Yeah. We all are making cocktail and mocktail. Not an issue. Another question to you, Sweta. GSTR 2B does not show the tax payment status. However, invoice shown in GSTR2B. Can we claim ITC if supplier fails to pay tax?
So this is one issue on which almost in every state there are petitions which have been filed left, right, and center, that merely because somebody else has not paid the tax, as long as I am aware that the invoice has been uploaded, why is it that my credit is getting penalized? I am a genuine person. I am a genuine recipient. Why should my credit be linked to his payment of tax? So I would say, if we are aware of the genuineness of this supplier, as long as I don't have any reasons to doubt that the tax has not been paid, as long as the invoice is appearing in my 2B, it's a reasonable assumption that the tax would have been paid. अगर और भी ज़्यादा strictly होके चलना है, then you take an affidavit from the supplier कि tax pay किया है. But again, practically it's not possible.
Chetan Jain has asked one question. That this was on credit note. Since Pavanji, I asked this query to you. GST officer is denying the reduction of liability if credit note is not reported in GSTR1. Is it challengeable? So he is becoming smarter. He is saying that I have issued the credit note in GST, but I have not reported in GSTR1. Can it be challenged?
Not reported in GSTR1, sir. Again, GSTR1 though is reporting, but if you are making adjustment in 3B, which is basically a liability adjustment return, here you can do. But for this purpose, because he has not reported in GSTR1, there is a good chances that recipient has not reversed the credit. So for defending his case, he must have to take a confirmation from his buyer that he has reversed that credit on that credit note which he has issued to him.
So quite obvious, if he has adjusted his tax liability in 3B, why he will not report the same in GSTR1? First of all, this reduction in liability is possible only when he's showing in both the GSTR1 and GSTR3B so as to match. Otherwise, he will have difference. And with the difference, then again, exposure. Why this difference is coming out? As per my advice, it should have been shown, but not shown. You can show now and get it corrected. All right. So maybe last.
But I think, sir, his question is officer is asking question. So I think this is the past transaction. So that solution to that past transaction is this.
Not an issue, but he can't have, both the things, both the laddu in both the hands. At one go, he will take the benefit of reduction in liability. And on another hand, he has not shown in GSTR1. And that's the reason he wants to get it challenged. See, it needs to be checked. You rightly said it needs to be checked whether the corresponding reversal is being done by the recipient or not. So maybe he has taken the reduction, not shown in GSTR1, and there is no reversal by the recipient also.
There is a chance.
It needs to be checked properly. Maybe last question, because we can continue to take as many questions as is being posted. But last question. Okay, I will not ask any question. Suppose I raise credit note. Shall I take debit note from client? Oh, Sandeep is asking even after 5 years. Sandeep, don't take me otherwise. If I say even after 5 years means still we need clarity. Suppose I raise credit note. So supplier raising credit note. Shall I take debit note from my customer, from my recipient, from my buyer?
Not mandatory.
Tushar?
So as Pavanji said, see, from GST perspective, it is not mandatory to take a debit note from the client. You are raising a GST credit note. You should report your GST credit note in your GSTR1, take adjustment in GSTR3B. Apart from that, very important point, which was raised by Bimal Jain sir and Pavan sir, that we have to ensure that the recipient has actually reversed the credit. Now, there is no mechanism to ensure that the recipient has reversed the credit or not. So we are also advising better to take an undertaking if feasible, that they are reversing the credit on this credit note, because what we have seen, say in Rajasthan, etc., the authorities are denying the benefit of GST credit note if you are not submitting this GST undertaking by the recipient that they have reversed the credit. So that is a practical document which you can take from the recipient. But taking of debit note is not necessarily from GST angle. It may be a document from your accounting perspective.
Okay, just for last, 1 minute, each one of us can say something to the audience for getting ready to file GSTR9 and 9C. Start with Sweta.
It's action time, sir.
Okay, Tushar.
Don't take GSTR9 and 9C as a compliance. Think it as an opportunity to reconcile your books, returns, GSTR1, 3B, etc. An opportunity to undertake health checkup and pay whatever tax is legally payable and make whatever adjustment is legally due. And apart from this, it is also an opportunity to prepare your data. For example, when we talk about RCM, please prepare your data that how much RCM I have paid in 3B and what is in my books of account under RCM ledger. So it is an opportunity to prepare your data in systematic format, which will help you in departmental audits in future, which will help you in identifying any exposures or to avail any opportunity which is missed. So it's a opportunity which is available to all of us, not a compliance.
Pavan?
Continue with the Tushar's comment and retreating my point that first, as Tushar said, whatever legal liability is arising due to during the filing of 9 and 9C, we should pay and appropriately mention the DRC's 303 details therein. As further I discussed, if the differences are not in relation to the liability or any tax liability or any availment with respect to credit, whichever not required to reverse. So please manage that difference in other column rather than showing it as in a difference column. Literally speaking, I have seen very much ongoing litigation just because of my amount is coming in difference column, irrespective whether it have a tax impact or not. This is my mission.
Okay, maybe I can also say for 1 minute. I can only say that 9 and 9C is not, I said in my theme presentation, repeating again, is not reconciliation of your mathematical numbers. It's an opportunity that we must correct our transaction. It is not only from coming from GSTR1 or GSTR3B. There may be many other points which may not be taken care of. It may be on tax rate, it may be on valuation, it may be on chargeability, it may be on multiple factors. And I said there should be separation, maker and checker. And we have to devote our time. And this is the opportunity we can correct everything. And hardly 8 days are left. If something not matching with your 2A, 2B, go back to your supplier immediately and tell him to correct in a GSTR1 for the month of September. So it's a high time we must act and reconcile at best whatever possible. Apart from legal question where we are not having clarity, of course, we have to jot down those pointers and we have to find the answer for those queries. May not be possible in coming 10 days, but maybe we can prepare for 22, 23 to take it forward and to see that compliances are being done in a right perspective. Otherwise, rate of interest for any kind of short payment of tax, 18%. Can you think of? It looks like I need to take a loan from the bank at 12% rate and pay the GST liability. It is not helping out SME and MSME sector. I always say to them, we represent to the government as well and repeatedly tell them that this rate of interest is too high. Coming back to penalty, look at section 129, detention, seizure, 200% of tax amount penalty and filing appeal 25% pre-deposit in cash. So GST, to my mind, it was implemented to provide good and simple tax, ease of business, but we all know where we are heading for. Yes, government is trying their best. They are making many changes to provide that comfort zone, ease of business, making changes. But while making changes, our life is becoming miserable. We are not able to remember what happened yesterday, what is happening today, and what will continue tomorrow. So GST is a big challenge for us. So 9 and 9C, we have done this program webinar and a lot of you attended. So let me say thanks to each one of you who has taken out your time and participated today. My compliment to all three speakers, Tusarji, Sweta, and Pavanji, and complimenting all the participants. You can say in a chat box, at least a question answers box, chat is not active for all the participants. I hope you must have got some good insight, some good answers for which you are looking for something from our side. So you may write your comment in your question answers box. At least we will get an idea that yes, today's webinar was real benefit to each one of you. So now Sarmaji has taken out time and he's there, I can see him. So he can formally convey vote of thanks.
Thank you, Chair Shri Bimal Jain ji, and thank you, Shri Pavan Arora ji, Tushar Agarwal ji, and Shweta ji, for your deliberations and your participation in today's program, which is very, very meaningful and helpful for the trade and industry to move forward, as we are going to become a fastest moving economy once again, and we are shining in the global charts. Our growth rate is highest in the advanced economies. Among the leading economies, top 10 economies. So moving ahead, we need a lot of reforms in the segments such as GST to become more and more prominent in the ease of doing business segment. So we look forward more sessions on such topics under the dynamic leadership of our chair, Shri Bimal Jain ji, and supported by our co-chair and all the eminent dignitaries from the industry and experts from the various organizations. So we thank you all for sparing your valuable time and providing the meaningful and effective presentations to move forward and to support the trade and industry at this juncture, which is very, very crucial for India to move forward and to become more and more prominent. Thank you very much. Thank you, Chairman Shri Bimal Jain ji, and thank you all the dignitaries.
Thank you very much.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.
Thank you.